Hey, very good day to everyone. In today's episode of Growing Your Tree of Prosperity, I'm going to talk a little bit on this theme of investing in REITs that have already bombed in the stock market. All right. So during the pandemic, US office REITs were facing a crisis as some people were made to work from home, and that lowered the demand for office rental space. Making matters worse in 2022, when the Fed began to raise interest rates, it made it more expensive for these REITs to service their loans. So, in a state of panic, the US office REITs tumbled, and all of them, except one, stopped paying out dividends. And even that one single REIT that carried on giving out dividends were reduced substantially. Okay, and if you look at these three REITs, Manulife REIT, Keppel Pacific Oak REIT, and Prime REIT, it was just a disaster, right? You can look at the graph here, okay, and the annual returns was zero. Annual standard deviation, we're talking 36%, right? And the maximum drawdown, if you bought at a peak, you would have lost 82%. Okay, so this is just how a bad investment looked like, and I've lost a lot of money in very similar stories. I think closer to 2007 to 2008, I had this thing known as shipping trusts. They were very popular business trusts, give a fantastic double-digit dividend yield, and I've lost a lot of money. Okay, and so the history of a yields-based investor is full of these stories about looking for these companies that have a very high yield, but ultimately the story just failed, and a lot of these cash flows have to be ceased, right, after a really nasty event. Okay, so this is really bad. Okay, now as bad as things are, the case for these US office REITs have sort of recovered, right? The main reason is that it's still very unpopular with retail investors, and there are still overhanging problems on whether employees would be willing to return to these offices to work. But I think a very small minority of retail investors are saying that maybe these dividends will be restored very soon, and it might be time to just collect one or two of them because they are trading at a mere fraction of its book value. Okay, so yeah, so some contrarian investors are looking at the potential of these office REITs again, and so let's explore that. Which sort of brings us to our shallow dive today. It's on Prime US REIT, and I'm looking at Prime US REIT because when these office REITs bombed, I took a decent position in Keppel Pacific Oak, which is my favorite among the three, and that position has been very profitable. All right, it's made me a substantial amount of money today, but it's still not giving dividends, right? Yeah, but I think the worst is over, and the management seems to say that 2026 they'll give a dividend no matter what, right? So things look good. So I'm thinking of diversifying away from Keppel Pacific Oak, and I'm looking at Prime US REIT. So that's what we are going to do. And this is a real estate investment trust that was actually the shining hero of this category because it has a diversified portfolio of Class A, freehold, income-producing office properties in the United States. If this were a Singapore REIT, you could imagine how attractive it is, right? High-quality assets, okay, and is initially designed to deliver stable distributions with long-term growth of net asset value per unit. All right. The three most significant buildings are, okay, I've not been there. Some of you might have been there. 222 Main in Salt Lake City, 171 17th Street in Midtown Atlanta, Georgia, Sorrento Towers in San Diego, California, right? So these are good property. The market cap is obviously very low, 287.2 million. And of course, just to see how badly beaten down it is, right? The price to the funds from operations, that means the amount that you're collecting to operate the buildings and all that, is at a ridiculously high of 110, right? Which means that, it's still very unsafe to own this. Okay, it could be many times higher than, for example, our Ascendus REITs and all that. The PFFO is about like within 15 to 18, that kind of range, which is what the Singapore buildings are giving, right? So this is really a very risky investment, right? In terms of what you're betting on. We're obviously betting on the fact that the funds from operations would climb up next year. Okay, if it stays the same, you're basically screwed. All right. Okay, so what's the main draw? The main draw is that with 40 cents, it can pick you $1 worth of property. Okay, and it is no longer in decline. Okay, so what's the dividend situation in prime US REIT? The divestment of one town center made the REIT lose a source of rental payouts. Okay, they are experiencing high finance costs, low occupancy. They need some money to invest in capex and to reduce debt. Okay, and all this led to the dividends being lowered to about, I think, 10% of what it originally was. Okay, so some people believe that dividends are likely to recover in mid-2026. So very likely dividends will recover for Keppel Pacific Oak first, followed by Prime. Okay, and then occupancies will go up and tenants will start paying leases in cash. And this is a very important distinction. In Singapore, when you rent out an office unit, you expect the rental payouts to happen immediately because land is scarce in Singapore, right? If you are a landlord in the US, you don't have that same kind of privilege, right? You would offer them, like, for example, a 1 year free rental. So while you have tenants and they are occupied in your property, they don't start paying until 1 year later, right? So when they say that dividends will recover, it is likely because, people are really starting to get cash from the tenants. That's why it's taking a very long time. You need to be very patient when you buy US property, okay? And the projection is that dividends are going to be fully restored to normal either on end 2026 or even 2027, okay? So this is clearly a long-term investment. If you buy it now, you got to hold it for at least 1.5 years for the investment thesis to be totally played out, all right? So you need to be very patient. And I'm looking at using dividends to put into prime REIT, all right? I'm not using hard-earned money to do that. I'm using dividends to do this, all right? Hoping that, maybe I can, get 20 to 30% from my investments, okay? So how do we think about US prime REIT, okay? It is a recovery play, okay? It's not even a yield play right now. And you have to see this through to the bitter end in 2027, all right? The strength is the high quality of the office assets, and there is evidence of improving occupancy and rental reversions. Remember, improving occupancy in the US may not translate into funds from operations because payments can start after a lag period. Okay, so take note of that. The weaknesses is that it is a small market, small REIT, low liquidity, interest rates are also remaining rather high. Okay, but I think the Fed is now realizing that the economy is in trouble, so they are lowering interest rates. Just remember that inflation may be bad, but unemployment is many times worse, right? People are unemployed, they can commit suicide. So if I'm a Fed chair, I will always prioritize full employment. Okay, yeah. Okay, and there will be opportunities. If somehow, companies are able to cajole their employees to return to the office, or if there's a flight to quality, people are picking up these really good Class A officers, then it'll be good for this REIT. Okay, and as usual, the threats include macroeconomic risk and interest rate risk. And I think recently the H-1B visa problem that Trump is doing to his tech companies will reverberate throughout the investment space. Yeah, I would expect some local investors to be affected as well. Okay, so what you need to do before you make a decision on something like prime REIT, This is a turnaround play. All right, it can be risky, and you need to play until 2029 to see this thing being played out, right? But the good news is price have already been beaten down. The odds of a recovery in price is going to be high, provided that nothing happens, right? And given that Trump is president, it is unlikely that nothing will happen. Okay, so you need to be very worried. You should follow the REIT, take note of further divestment of the buildings. Maybe along the way, a buyer comes along and the REIT might sell a building to free up some cash flow and reduce the gearing. That's not a bad thing. Okay, and further drops in the interest rate can also be beneficial to the unit holder. Okay, but you can't put a large position into this stock. All right, you simply can't afford to do that. Okay, you can put a little bit just to play. It could be a satellite position. It could be funny money. It could be toy money. You could put into prime REIT. Okay, and if you wish to play the recovery team in US offices like me, you might be wise to spread your capital across 3 of these offices, right? Just to make sure that you spread your eggs between these 3 baskets while you wait for the recovery to happen. Okay, and with that, thank you very much. If you enjoy my content, you can subscribe to my channel, right? Buy me a coffee here, or if you want to listen to my life story and figure out how the FIRE movement works, Google ERM intro, take the first link, and you can attend my next preview. And with that, that's all I have for you for this episode. Thank you very much.